Hello, my name is Darren, and we are members of something called the International Business Structuring Association, or IPSA. Essentially, it's a network of professionals that serve clients, private clients, or families that are exposed to multiple jurisdictions and they're running businesses, entrepreneurs. So it's not just restricted to tax, even though we're going to talk about tax. It'll be like investment migration, IP lawyers, insolvency, just anything to do with what the family will go through as they cross borders. And with that, I'd like to introduce you to the panel. Jose, you're going to start from your side and introduce yourself.
Thanks everyone to join this, and thanks Darren and Skipper 80 also for our participation. I'm a tax partner in Squire Pratt & Boggs, based in the Madrid office. I do international tax, even though I could sound probably American. It's my mom's American, my dad's Spanish, and I'm actually probably the only one not talking about U.S. taxes here, but some of the additions around that, which is always great to hear. Everyone living outside of the UAE, like myself, is excited to come to a place where Texas is a friendly environment for taxes. So you got to stay away of our tax network around how the trends, the difficulties around kind of keeping the taxes low, and especially with U.S. citizens. So happy to be here and try to contribute to this discussion.
My name is Jimmy Sexton. I'm the founder and CEO of Esquire Group. We provide international tax and wealth planning services to affluent multinational families and help them minimize their taxes and pass their wealth to the next generation in a tax efficient, organized manner.
My name is Vince Trung. I'm based here in Gate West with a company called GSD Capital. I'm from California. I'm an American CFP, so I do financial planning, financial modeling, asset management for clients, and I've been here 16 years now.
I just want to understand, what are the obligations on the taxpayers themselves to keep track of their lifetime gifting for this proposed $15 bill? How aggressive are IRS, for example, in challenging records?
Well, they can get pretty aggressive, right? What's the annual gift tax exclusion right now? $18,000? Up to $18,000 a year, you can give gift without having to file any sort of reports or anything like that. That's per person. Once you exceed the $18,000, then you have to file a gift tax return with the IRS to inform them how much of your gift tax exclusion that you're using. And then so they have a record from it, gift tax returns that you file. Now, obviously, if you don't file the gift tax return and it becomes an issue later, if you don't produce the record, there's also, obviously there's penalties and all that kinds of stuff for not filing. But if you can't produce the records, it's going to be an issue.
For example, a US citizen resident here in the UAE got his bank accounts in Switzerland. Let's say they decide to liquidate some of their portfolio, make a gift of cash, a few $100,000 for a child here and there each year. The legal obligation is on the taxpayer to file. It's not on the institution that's holding the funds.
That's correct. It's on the taxpayer. But the U.S. citizen giving the gift has the obligation to file the gift tax return and keep the records.
And one has just to add to that, one has to be pretty conscious of the relationship between the person who's giving and the person who's receiving. Because yes, there's that 18 or so threshold, 18K, but if it is, and it would be the case here in UAE where you have mixed families, right? Some members are US exposed and some members are not. Some members are citizens, some members are green card holders. And depending on their relationship and their status, there will be different thresholds. Sometimes it's 100,000, sometimes 130,000. And the penalty for non-compliance can be pretty aggressive. It's up to 30% of the unreported gift, which it can be pretty substantial. And again, when it comes to international tax, it's a bit counterintuitive because you think that the IRS is all about making money. But no, I think, and Jimmy could jump in, but my thinking is that it's about data. Somehow they just want to know your business, right? And so the penalty for not paying taxes, okay, penalties and interest, but for not reporting and some of these transactions on these reporting forms, they're really aggressive. It's not just civil, but it can be criminal as well. You just need to be careful.